here's the first take on the index. Not looking good. 50 points gone on the Nifty.
Still down 120 points on the Nifty. The sensex down 350 points.
Another day of weakness that we are seeing for the Indian markets. Nifty is down around 140 points.
This is a market of two halves, two or three halves, I should say, because the Nifty is down and out, the Bank Nifty is up, and the broader markets are down and out as well.
So we're going to be going home with a cut of just about 60 odd points, which is looking much better than before.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for the day. Stock markets fall for the 7th straight session. Sensex loses nearly 3,200 points while the Nifty breaches budget day lows. All sectoral indices close with cuts except for the Nifty Bank. Bajaj Auto loses 5% after reports of a 25% production cut across its export plants. Weakness in export markets like Nigeria is the likely reason for this cut. The company tells CNBC-TV18 production has been lower for all two-wheeler exporters in the past few months. Sources say that the Bharti Group had shown interest in buying Paytm's stake, but talks collapsed last month. Sources say that Paytm did not want to give up management control. That's a CNBC-TV18 exclusive. Consumer companies exude confidence about post-COVID recovery. Indian Hotels says that post-COVID recovery is more profitable as it has been driven by higher prices. Berger expects double-digit volume growth in FY24. VIP says that growth is 20% higher than pre-COVID levels seen in FY20. Veteran banker KV Kamath says there is no loss of confidence in the Adani crisis. The group's stocks remain under pressure, losing 34,000 crores in market capitalization today. Adani Ports bucks the trend after its dozen port ships more than 300 million metric tons of cargo handling in just 329 days. All right, well, those were the top stories. Let's also tell you what we have lined up on the show for you. We bring you key commentary on India's growth story and more from KV Kamath, chairperson of National Bank for Financing Infrastructure and Development. In Corporate Voices, we have with us Puneet Chatwal of Indian Hotels, Abhijit Roy of Berger Paints, and Anindya Datta of VIP Industries. All right, well, let's start with the top headline. Let's start with the market action where the Sensex and the Nifty, in fact, declined for the 7th straight session. The Sensex lost over 175 points and the Nifty lost over 70 points. Barring the Nifty Bank, every sectoral index ended in the red. Mid-caps also fell in tandem with the blue chips. BSE companies saw their market capitalization erode by 2 lakh crores today. All in all, the last 7 sessions, investor wealth to the tune of 10 lakh crore rupees has been wiped out. Prashant Nair is here with the market wrap.
For the 8th day in a row, the market was under pressure. The Nifty lost, did not quite end at the low point of the day. There was a significant bounce, but it was under pressure once again. And this, of course, was after the very weak handoff that we got from Wall Street on Friday, especially with the Nasdaq down sharply, dollar up and yields higher as well. Banks are one area which saw recovery. They've been big underperformer all of last week, but they were strong, both the private and the public bank space. I'll get to those specific names in a bit. Sectorally speaking, let's start with what lost. Metals as a pocket lost, IT was down, and autos as a pack was sharply lower as well. As I said, PSU and private banks both were higher. The index itself ending about 0.75% in the green. Nifty losses, starting Adani Enterprises saw a sharp cut. Bajaj Auto, there was a production cut which impacted the name. UPL, Tata Steel, Infosys and Eicher Motors were some of the other names which were down and out. Banks did well, as I said, so ICICI Bank, Kotak Bank and SBI pulled in the other direction as opposed to the other names that I mentioned earlier. The broader markets had it bad. So 3:1, more than 3:1, declines to advances ratio. The market breadth was actually pretty poor. Names like Z lost quite a bit. Emphasis, Mahindra CIE, Uflex, Jindal SAW, Keynes, JK Lakshmi, Sunflag, Mirza International, and so on and so forth. These are the heavy volume-led losses that we had. Gains coming through in Loda, RHIM, Sanofi, Tube Investments, and a few others as well. But as I said, more down than up in terms of the broader market session, mid-cap, small caps included. I think many will be hoping that after testing the budget day low and closing around it, the market finds some stability. A lot of it, I think, will depend on A, how much more selling we are likely to see both from locals and the foreign institutional investors. And number two, whether the global setup, which is looking a little wobbly with the dollar marching upwards, stabilizes or not. I think we'll find out when we come back tomorrow morning. Back to you.
Okay, all right, Prashant, thanks very much for that. 17,300 odd was the intraday low for the Nifty today. But let's move on. In market opinion, Ed Yardeni, president of Yardeni Research, says the Fed will have to raise rates to bring inflation down. He adds there will be volatility across the world due to rate hikes.
I think what really has changed during February is a perception that instead of arguing over soft landing versus hard landing, we have to now consider no landing. And I think what the market's concerned about recently is an inflationary no landing, which would just be a long way to a hard landing after all, because the Fed would have to raise interest rates much higher to get inflation down. My thinking is that we're going to see quite a bit of volatility around the world, including India, mostly because the Fed is driving concerns about still higher interest rates. Look, the Fed has made it very clear they're not even thinking about lowering interest rates.
All right, moving on to more opinion. KV Kamath, who's the chairperson of NABFID, commenting on the Indian economy, said India will not slow down. He further stated that he expects infra growth to pick up.
We need to go in sync with the West. That's all I'm saying. Infrastructure, I see no slowdown. In fact, I see a speeding up.
All right, well, on to the second headline now. Bajaj Auto has cut production by 25% across its export plants. This is according to reports that attribute the weakness in export markets like Nigeria as the reason for this cut. Remember, the company has told CNBC-TV18 production has been lower for all two-wheeler exporters in the past few months. Sonia Shenoy is here with the details on this.
Well, thanks a lot for that. You know, this is a problem that is well known and documented, right? That the export markets are under pressure for most two-wheelers. And now, you know, the production cuts have also come through. Now, Bajaj Auto reports indicate that the company will be taking a production cut as steep as 25% across its export plants because of the situation that's ongoing in Nigeria as well as in Egypt. Now, you know, Bajaj Auto could be cutting their production to around 250 to 270,000 units in March. This compares to almost 340,000 units on an average that they were producing in 9 months of FY23. We reached out to the management, who said that this is not new information in the sense that most two-wheeler exporters are under pressure because of the you know, export markets that are challenging, and the production cuts have been ongoing for a while now. In fact, Nomura put out a note where they are expecting the export wholesale numbers for Bajaj Auto to fall drastically in the month of February. The data will be out in a couple of days from now. A 45% year-on-year slide is what Nomura is forecasting. They say overall the two-wheeler industry wholesales will continue to remain weak. In fact, the volumes for the two-wheelers in February will be 28% down from the peak that we saw in Jan of 2018. So no recovery in two-wheelers, and you know, the export piece continues to be under pressure. Back to you.
Okay, all right, Sonia, thanks very much for that. So Bajaj Auto down over 5% in today's trading session. But on to the third headline today, a CNBC-TV18 exclusive. Telecom major Bharti Airtel was in talks with Paytm to buy stake in the company. However, the deal collapsed last month. Sources have told CNBC-TV18 that Paytm declined to give up management control to Bharti Airtel. Nisha Podar, who broke the story, joins in with the details.
That's right. Sources with direct knowledge who know about the developments in both the companies, Bharti Group as well as Paytm, have shared with us that there was indeed an exploratory deal talk between Bharti Group as well as Paytm in the month of January. But the deal talks did not continue and it collapsed. And at the current moment, there is no transaction on the table or no deal talks between these two parties, is what we gather from sources with direct knowledge. Now, that is a clarity on the present status of any such transaction. Regarding also addressing the reports which have been speculating about a transaction. But on the other hand, what really transpired is that Bharti Group, as we understand from direct sources, had been interested in buying a stake in the parent company Paytm, even though they have a common business of payments bank, which is under Bharti Airtel as well as under Paytm. So even though they have commonality when it comes to business, it was the parent company, Paytm, in which Bharti Group was interested in probably exploring a stake buy, but the deal talks collapsed, as we gather from sources, because Paytm management was not keen on giving up the management control. Also, we gather that Paytm does not think that there is a strategic alliance even in payments bank business between Bharti Group as well as Paytm, because their models of doing this business are completely different. So those are the important aspects because of which the deal talks did not fructify and had collapsed in the last month. And at the moment we gather, there are no deal talks on between Bharti Group as well as Paytm. Time will only tell if at all there is a revival in this direction. But also remember that Ant Group as well as SoftBank put together own about 38% stake in the company, and Ant Group, the single largest shareholder, will have to shave off some bit of their stake because of the SEBI norms, which does not allow it to have a stake of 25%. So they'll have to bring it down and they'll have to sell some part of the stake. But experts do also point out, with such a large stake between two influential investors, well, they will also play a pivotal role in any deal transaction in future as well for Paytm.
Okay, all right, Nisha, thanks very much for bringing us what is one of the big stories of the day. But moving on to another big stock which was in the news, Dr. Reddy's from the Nifty space has announced the acquisition of Main Pharma's US generic prescription product portfolio for $90 million. The portfolio includes around 85 generic products, many of which are focused on women's health. The stock was down 2.5% on an intraday basis. It closed around 1.5% lower because the fear is that there would be US pricing pressure, which could probably impact the portfolio going forward. However, there is a divergent view that maybe the pricing pressure in the US markets has also bottomed out, and there could be eventual synergies within this portfolio and cost savings as well. Now, in terms of valuations, they've spent around $90 million, and it comes to around 1 times price to sales, which is reasonable according to analysts. So let's see. They do also have a couple of products which they are still to launch in the US markets, and that could be worth around $250 to $300 million as well, and hence it could be a lucrative opportunity going forward. So that's on Dr. Reddy's went shopping in the US market. For that, time for a break now, but stay tuned, we'll be back. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's get to the rest of the stories that we're tracking for you this evening. On to the fourth headline today, then. Consumer-facing businesses see an uptick in demand, marking a recovery from the COVID slump. Indian Hotels MD and CEO Puneet Chhatwal has said that the company is seeing recovery aided by strong leisure and business travels. Meanwhile, Berger Paints expects double-digit volume and value growth in FY24, and VIP Industries says that growth is 20% higher than pre-COVID levels seen in FY20.
It would be fair to say that leisure across the globe and in all domestic markets has led the recovery in the sector which was demolished during COVID times. And the leisure is evolving in a very new dimension, because the term leisure was coined maybe 10-15 years ago, but we did not see much of it. So now we see that people are combining business, leisure. Business is more than 100%. For us, it's definitely gone beyond 100.
Q4 is a normalized base, and therefore we expect double-digit volume growth and value growth in Q4. So if you look at the demand scenario, it seems to be fairly okay. Earlier, the urban centers were doing much better. But in February, it's the upcountry also, which is doing relatively better than what it was doing earlier.
The kind of travel and all the demand cohorts that works for us seems to continue as we speak, both, travel, wedding, students travel, and also a bit of tailwind because of the unorganized sector yielding faster into the organized sector as we speak. If you look at Q1 and Q2, the first half of the year, I think the industry is going to grow anywhere between 10 to 15%, and I think volume would be also there about the same. And we would have an ambition of growing faster than the market to gain back some of the share that we had lost in the previous years.
All right, and moving on to other stocks making news, Mphasis slid 8% after Citi maintained its sell rating on the stock. The brokerage has cited slowing deal conversion for the decision. Reema's here with the details on this.
Thanks so much for that. So here I'm quoting a Citi report, and this is after they met with the CFO of Mphasis, Mr. Manish Duggar, and here are the key takeaways from their conversation. One, on growth. They're saying that the current environment is resulting in lower deal converting into actual revenues. So there is that bit of slowness there. In terms of Q4, the mortgage business, which is suffering for Mphasis, continues to remain muted in Q4. But the good part is at least now there are no furloughs. In Q3, there were fewer working days, there were higher furloughs, but that's absent in Q4. So net, on the top line, it will really be a function of how the mortgage business pans out. Secondly, on the deal pipeline, they say it continues to be healthy. They've got large deals in the pipeline. It's very diversified. They've got deals across various verticals and sectors. But the problem is it's taking longer to convert those deals into actual revenues. The sales cycles have gone up. The company indicated that they continue to remain active on the M&A front. This is something that they've been highlighting for the last couple of months. Margin guidance has been maintained between 5.25 to 17% for this year. But Citi has a sell call because valuations too are at 22 times forward multiple. So they've got a sell call on Mphasis. Back to you.
Okay, all right, Reema, thanks very much for that. Well, on to the fifth headline today. The Adani Group stocks remained under pressure. All of the Adani Group stocks, except for Adani Ports, ended the day in the red. The stock gained after its dozen ports shipped more than 300 million metric tons of cargo handling in just 329 days. Meanwhile, a report by Bernstein said that March to September would be the real test with regards to debt repayment and refinancing for the Adani Group. Vivek Iyer is here with the details.
Today, Bernstein has come out with a report, and what they're saying is that the key timeline is to watch out for is going to be March to September of 2024, which is going to be the key challenge as far as the group is concerned in terms of the debt repayment schedule that they have. So number one, what's actually happening is a leverage of almost $3 billion taken for the Ambuja acquisition matures in March 2024. The Ambuja warrants, where it requires almost 15,000 crore of fund infusion, that is expiring by April 2024. The Ambuja second tranche of close to $1 billion matures September 2024. Adani Ports, 650 million bond, is actually maturing in July 2024, and this is an unsecured, unsecured development. Adani Green Bond Holding Company. Now, this is very important. $750 million maturing in September 2024. And what Bernstein is saying is that this is going to be the largest challenge, the Adani Green Holding Bond. Now, what they also add is that while Ambuja Cements and Ports business have strong assets, the timing of the maturity as far as Ambuja is concerned, they believe can put a strain as far as growth is concerned for the company, as well as the liquidity plans that they have in store as far as their own capex is concerned.
Okay, all right, Vivek. Thanks very much for that. Well, veteran banker KV Kamath says there is no loss of confidence in the Adani crisis. Also adds that no single group or company can write the history of a nation.
I don't think that any single group makes, or carves out the history of this nation. So I have, really speaking, no concern that overall India will continue on its path of progress at the pace we have outlined. And I don't see any loss of confidence in India.
All right, on that note, it's a wrap on this edition of Markets Today. Thank you, everybody, for watching. But before we go, we have some somber news this evening. We are deeply saddened by the passing of stock market commentator Ashwini Gujral. CNBC-TV18 expresses its condolences to his family.